Welcome to this panel on collateral privacy. I'm sure you're all familiar with the friction trying to operate on-chain, and everything is great when you transact on-chain until somebody knows what your address is and a single transfer becomes market moving. So very excited to have our great panelists today. We'll do a quick round of intro and then just dive into it. So let's start to my left with Leo.
Hi guys, I'm Leo Mizuhara. I'm founder and CEO of Hashnode. We're an on-chain first asset manager. My background is 17 years in TradFi before starting this, so a lot of the conversations that we're going to have today are very close to a lot of issues we've had in the past.
Hello everybody, I'm Eric Cernecki. I'm one of the co-founders at Digital Asset. Prior to this, I spent about a decade at DRW, and I started Cumberland early days.
Hey everyone, name is Bimnat Abibi, Director of Principal Trading at Galaxy Digital. I've been there for 4 years. Prior to that, I spent 5 years in various trading roles at Citigroup.
Thanks everyone. So we'll get started directly with Canton. So Eric, Canton has always prioritized privacy from the very beginning, especially as you guys work with a lot of institutions. So what drove that early focus on privacy, especially collateral privacy, and why is this critical for our audience today to understand that how that is a cornerstone for institutional adoption of crypto rails and having the right liquidity needed to operate in the space?
Yeah, sure. I mean, that's a great question. You go back to very, very early days of Satoshi posting in the forums, and he says the transparency is a bug, not a feature. Somehow this narrative has been created in the space that transparency is the value of the blockchain, and it's far, far, far from it. I think the easiest way to understand this is imagine walking down the street. You got a little dollar sign above your head. Everybody knows how much money you have. It's not so safe to walk down the street anymore. So just basic market fundamentals, safety, just market fairness is based on the asymmetric information of you know exactly what you're supposed to know. So when we started Digital Asset, we just recognized that a threshold issue for adopting the technology for any real-world application is privacy. And important to note that we do not mean anonymity when we say privacy. That's a common conflation. So really, when we're talking about real-world assets, it's about the specific definition of who must know, and those people are always guaranteed to know. They have high integrity guarantees and proofs, and everybody else by default is not allowed to know. They're not allowed to see it, they're not allowed to store it, they're not allowed to validate it, encrypted or otherwise. That data doesn't belong in anyone else's environment. And when you talk about privacy, there's so many different elements of what you're solving for. You go into jurisdictions like Singapore, data is not allowed to leave. So it's not just whether or not you can see something. So privacy we recognize it as a meaningful threshold issue, and it's been at the heart of everything that we've done in the Canton network for the past 10 years.
And how are you guys addressing that problem from a structural solution?
I mean, I think the easiest way to think about Canton is to think about the internet. No one party in the internet stores all of the data of the internet, but yet I still have a single experience as a user. So Canton is actually a really fragmented underlying ecosystem. Every app controls exactly how it behaves in the ecosystem. It determines exactly who can see what, who could join. Just because I have a browser doesn't mean I get to see every bank account at chase.com. And that's exactly the same way that Canton works. There's no fancy new cryptography developments, just designed a protocol that said, for the parties that must know, they have the data integrity guarantees of being on a blockchain, and nobody else ever sees, stores, or touches it. So it's just a totally unlimited horizontal scaling system with segmented data privacy, old-fashioned, very, very secure, very safe.
And so let's go back to what you mentioned of full transparency is a bug, not a feature. Because one of the big arguments in crypto has often been that pure transparency is really good for the market. How is that true in reality?
I mean, a couple other traders here around me, I'll let them speak to it, but at DRW, we worked very hard to know other people's positions. It colored the way that we thought about making markets. The fairness of markets is being able to provide a truly fair price discovery to someone, and knowing their position, knowing what they need to do, doesn't always produce the like absolute price perfect sort of scenario. So knowing positions, knowing what people are trying to do, it interferes with market fairness. It just does. And so the full transparency might make sense for something like an NFT, where you're trying to brag about, I own this piece of art and I bought it and I paid this much money, I'm so cool, look at me. Like, genuinely, I could see the benefit of that. But when you're talking about, what's your US Treasury position, or how much collateral are you delivering to the options exchange because of, how many options you may be long or short there, that is actually market changing, and it will interfere with the fairness of markets.
So I can throw a couple of examples in there that are very kind of both real to the current market, but also are very important for the traditional market in general. Hashnode is actually the issuer of USYC, which is fourth largest money market token out there, and really was built as a collateral asset. And as Eric mentioned, like when you're posting collateral for an options market, that transparency is really problematic, right? If we are, so we're accepted on Deribit right now, and the problem with transparency is that theoretically, if you can identify somebody's wallet, call it galaxies, and you can see that their collateral is moving up and down in a correlated fashion to Bitcoin, right? You can infer what their position is going to be. And that's really damaging, right? That's the kind of information that trading firms are looking for all day long. And people might think, oh, that's okay, like that makes the market more efficient, but it really doesn't, right? It actually amplifies moves when you think that you can start firing at a hedge fund or a trading firm's positions. And so in order to not create that extra volatility, I think that that ability to have privacy around your collateral allocation is really important. In a second example, so previous to my, so I was at DRW for 5 years before starting Hashnode. Before that, I was at Bank of America for 12 years. We ran the corporate investments group. And for us, if there was a rumor that we were going to move funds, the market would move, right? And that's a cost to the consumer, right? Whenever our hedging costs were higher because information leaked or something, that would be a cost directly to the people to whom we're issuing mortgages, the people to whom we're paying interest out of their savings accounts, people who are trying to take loans out from Bank of America. So that information leakage in itself can be really problematic and expensive for customers of one of the biggest banks in the world. So in these ways, we think that privacy is going to be super important when you're trying to grow this ecosystem. And so the Canton blockchain is a perfect place for products like our USYC collateral token, because the primary use case is one in which privacy is super important.
Yeah, and just picking up on Leo's first example of, when you've got collateral being posted to Deribit every time, Bitcoin goes up, folks might identify that as, a counterparty being short upside or short optionality, when in reality, I could have a trade on in CME or in OTC form. And so that's really incomplete information. And so when you've got this full transparency mode and folks are looking at information that isn't complete, that leads to bad outcomes a lot of times, and people don't even realize.
Any war stories from the trenches that you've heard of or that you've experienced?
I have a good one from OG Bitcoin days. There was a mining company called 21E6. They had in their fundraising deck, we will never sell a single Bitcoin, ever. And there were only a couple OTC desks at the time. The CTO makes a couple phone calls. Market was down 20% in 5 minutes.
Sounds an easy way to get indicted for fraud.
Yeah, but I mean, in illiquid markets, it's very, very easy to see. And there are definitely elements of the crypto ecosystems that are not liquid enough to shrug these things off.
And I think the best examples are actually, shorts getting squeezed. And anytime, shorts become public, the market constantly tries to squeeze folks. And GameStop was the biggest example. Everybody knew that, Citadel and Point72 were short. And so, retail just piled in. And so in a lot of those instances, transparency isn't really, your ideal sort of situation.
Maybe can one of you guys walk us through how, how can you get that information leakage and people identify that you're short an asset?
I mean, generally speaking, large traders like to use tri-party solutions. You guys use a tri-party solution. And the accounts that you're settling out of tend to be static. You're probably not rotating your pub keys because operational mistakes are higher probability of problem than someone front-running your orders. So you have static accounts at the exact same time every single day, making IM and VM movements in and out of the exchanges. The whole world has your accounts labeled today. And so it's very, very easy to track. Are you net delivering or net receiving collateral into the exchange at variation margin settlement time? So from there, there's only a few things you can trade on Deribit. It's pretty clear your long or short vol, long or short deltas based on what happened over the previous settlement cycle.
And again, I could just have the exact opposite position on in CME and nobody sees the VM I'm posting there. And so, you really put yourself in a bad situation just having everybody follow your movements.
Yeah, but I'll step away from collateral for a minute. I think that, for these trading use cases, I think it's fairly transparent and clear. But for the audience that's maybe not an institutional trader, just think about B2B payments. Imagine you're the auditor of a really large crypto exchange and you're getting paid in a stable coin on chain. That's leaking what you've charged that client, and maybe that is going to interfere with your ability to price your next audit client. And again, it's impartial information, so someone's not going to know that you're also providing XYZ services in kind, and someone's going to absolutely cut you on price on your next deal somewhere else. So just this information is not just in trading markets, it's in all of the price-making markets that we're involved in, and there's a real glass ceiling on the adoption of these systems, because as those payments, as those collateral movements become more material, more important to you, then that same value of that information becomes more important to the external market as well, for them to be able to utilize it against you. So that's why you see very, very low B2B payment volume in these ecosystems. It's why you haven't seen a lot of alternative collateral yet really get used at scale. Or my favorite question to ask people is, just imagine if all of your trading activity was completely transparent. Would that change how you interact with that exchange? And I think everyone has said
100%.
yes.
Yeah. I mean, it's like asking, would you act differently if there was a camera in front of you? And yes, right? Like in reality TV, people don't behave the same way, that they would if they weren't on camera.
We see a fair bit of this for people's wages as well. Like some people are asking to get paid in stablecoins, and when they realize that by being paid in stablecoins, they're actually just showing the world how much they get paid.
And their peers and colleagues, most importantly.
And then suddenly they're like, oh, never mind, that's not really what I want.
Yeah, and there are clear signs of that. We've done some work at the TIE on the lab side where, you have somebody who is an employee of a project, and you see recurring transfers to that account. Well, that's a full-time, that is the paid employee, right?
One of the big problems I have with the .eth addresses, right? When people do like their name.eth, and suddenly you always know what they're getting paid.
Yeah, and there's what you don't know now, but that you can figure out potentially later. And with AI and all the computational system, our ability to make sense of that data is increasing every day.
I think that's a very underappreciated point, is that it's not just that it's transparent, it's part of a public, permanent record. So maybe they can't figure it out today, but maybe in 10 years it wasn't cool to buy that brand of toothpaste anymore, and you're going to get canceled for it. That happens now. Like everything you've ever done is part of a permanent public record. So that's just a never-ending liability that you just can't get rid of.
Yeah. So going back to the collateral issue and moving to you, Leo, there's been a big trend in the last year of hugely skyrocketing and increasing AUM for yield-bearing cash equivalents. So Hashnote's USYC is part of that trend. How does that fit into this? Can privacy capabilities help drive utility for these kind of assets, especially for institutional investors? What are you seeing? What's your issuance strategy, and what use cases are you focusing on?
Yeah, so we've talked a lot about the specific use cases for collateral and why privacy is so important to traders there. But I think this is true in general with people are talking about using money markets as collateral within the trading ecosystem in general. And I think it's really important for people to think about, from a first principles perspective, how would I construct that collateral product differently from what we currently do in traditional finance? We look at a lot of our competitors and we say, that is not fit for purpose. It is a product that people were just kind of like, well, I've got this thing, I'm going to tokenize it. Whereas for us, we were very purposeful about the design of the token, the design of the payouts, and all the things that make this easy to use as collateral that are not necessarily true of our competitors. And that's why I think when you look at the big players in the market, we're up there with the big traditional firms because we designed it fit for purpose. And our deployment on Canton is an example of that, because we know that privacy is going to matter. And so we want to be the first ones to establish ourselves as the players who know that privacy is going to matter here, particularly for this collateral use case. We're going to help get exchanges on board. We know our market makers already care. All of our market makers have already talked to us about how that transparency thing is going to work for them.
Yeah, normally an L1 has to go cut a market making deal with a market maker to get them to join Canton. We've cut 0 deals. We have 15 of the largest market makers in the world on Canton. It was our first adopters. So it's coming very much on the back of this opportunity to solve these discrete problems that they have on every other chain. What you already do, but with the added benefit of privacy, is just the simplest way to approach the institutional participants.
I think it's also worth noting that from my perspective at least, I think collateral is going to be the first use case for traditional finance. Right? I know there's a bunch of things that are already happening, like mortgages are a great example on Canton. But when we think about crypto adoption into TradFi, the reason collateral is the first use case is because it's one of the most broken in TradFi. So when I ran a trading desk at DRW, it's a T+3 operation to move funds from CME to Eurex, for example. That's crazy to me. I can literally put cash in a box and ship it to Germany before I can get cash moved. It's the most asinine process. With on-chain collateral, we can do that immediately. Within seconds, right? And so that's why we thought that that's the first place it's going to go. And then when we think about the players, right, the players involved are players like DRW, Jane Street, Jump. These are all traditional finance firms that also dip their toes into crypto. So being able to say that all of these firms that are already familiar with how collateral is supposed to work are using on-chain collateral, they're the easiest players to push into traditional finance and say, hey, we're already using this. Let us also post it to CME. But that's going to be nearly impossible if it's fully transparent.
Yeah, we're solving with the same solution 2 very different problems. In TradFi, we have a mobility problem, your T+3 example. And in the crypto native funds, we don't have a mobility problem. Your assets move very quickly, but we have a transparency problem. And with the same solution in Canton, we can solve both those problems for both those parties, and both those parties participate on both sides of the trading venue. I don't know if people are aware, but some of the major trading exchanges allow you to post treasuries through a banking relationship. So this is already happening. This divide between the 2 worlds is very quickly dissolving, and so being able to solve that with a universal solution that allows the large institutional players to bring the best forms of collateral into the crypto markets is symbiotic.
Yeah, and Leo, you can't forget Galaxy in there in terms of the TradFi participants. But yeah, what I really like about this is, in terms of just thinking about the marketplace and what you're really trying to address. I think the global bond market in the U.S. is call it $50 trillion, and a ton of that trades as basically cash and cash equivalent in the sense of repo. Right, and so when you're trying to actually come up with a real world use case for crypto, this is the first thing that comes to mind for me. It's transferring value. It's it's crypto as collateral, and you can't really get to the ultimate state of that without addressing these transparency and privacy nuances. And so in terms of Hashnote being on Canton Network, this is exactly the type of synergy that you kind of need to have happen for us to really get to the point where you're addressing a $50 trillion market. right? I know that you guys have done, you're saying $2 trillion in repo, sorry, $2 billion in repo volume every month now.
No, it's trillion. We do 50 to 100 billion a day. Broadridge is here in the room. There we are.
Guys, like that's an amazing number. And if you told me, 2 years ago when I was, 4 years ago when I was on a repo desk, that there'd be a blockchain moving trillions of dollars in a pretty efficient way, I'd tell you, that sounds a little crazy. But the whole idea is that once these big institutions get a taste for it, in terms of the efficiencies, the cost savings, et cetera, it's almost a moot point as to, why wouldn't you do it, right? Like all of these big institutions, money market players, et cetera, they're fighting for basis points at a time. And so if you can take that whole operational layer and convert it and put it on a blockchain and, cut down your labor force by 80-90%, like guys are going to do it. And they're only going to do it if they're in good products, right? So it's really key that when you have a stable coin come to the market that's interest bearing, it's got the dynamics that TradFi players are accustomed to. And so like one of the reasons why I like Hashnode a lot is it's 90% reverse repos. Correct me if I'm wrong. And so it's got the liquidity kind of structure that I would be most attracted to, and if I was at my seat at Citigroup, I'd be like, oh, that's actually something I would do. And so this is really kind of where you'd like the space to head.
There's one feature we haven't talked about in Canton that I find really interesting and important. Just to build on this conversation, one thing that comes to my mind for privacy is we're acting like it's fully private all the time. But one feature I really like about Canton is that it's kind of selectively private, right, Eric? So again, this is a thing that came up when we were B of A portfolio, and this went through traditional markets as well. So when you report your transactions to a SEF, so a swap execution facility, if you're at different sizes, they won't show you the actual size, right? They'll show you the price and a category of size. And the reason they did that in traditional markets was because it was too damaging for players like B of A to be like, oh, we printed this much, 20 billion at this price. People would be like, oh, that's a big trade. We're going to front run the rest of that. Whereas with Canton, we can do almost the exact same thing, right? We can say, well, we want price transparency, so we'll show a price, and maybe we'll show a size category, or maybe we don't show any size, and that configurability is really valuable to us. We're currently talking about doing a bond issuance project with the folks at SocGen. They were here a second ago. And that will also be in Canton. And with things as illiquid as bonds, right, that privacy becomes even more important because it allows you to start, having the transparency would allow people to really fire against people's positions so much more clearly.
Yeah, thanks for reminded me, but the configuration is really the key about Canton. It's not a universal setting. So we have assets that are completely decentralized, totally public, and we have assets that are extremely locked down. Maybe only one or two parties know about what's going on with them and everything in between. So every unit of data is configurable to what is the appropriate thing to do. And what's also, I think, really interesting around some of these products are, it's been eye-opening to me to see how our auditors have treated us as holders of some assets on Canton, and being able to configure that an auditor could have their own node and have proofs of what's being taken place, and be able to independently verify what you do hold and don't hold, or be able to extend that to a regulator. So it's the configurability about Canton that I think is really quite unique, not just the general existence of privacy itself.
And jumping on that, right? You've all mentioned, right, what's at the core of a good, healthy, functioning financial market is price discovery, making sure that fundamental changes get reflected in prices as fast as possible, without having harmful behaviors like front running. Because at the end of the day, it's everybody's retirement accounts that suffer from that. So how is Canton addressing that from, you mentioned privacy and disclosures, the ability to have auditors get the right information that they need. What about regulatory aspects?
I mean, very, very easy. You configure who must know it. They get guaranteed a real-time stream of that data, and then it's whatever their right is to do with that data, they're entitled to do so. So there's a project around someone building a data oracle on Canton. Normally, a data oracle on a public network, you're talking about injecting data in, but in Canton, we're actually talking about buying the right to be an observer to that information and redistribute it. And some of those use cases for redistribution are in aggregate. Hey, what's the TVL of USYC on Canton? There's really only one party that can answer that question, and it's Hashnote, unless they're allowing a third party to be an observer to that information and disclose it in aggregate. But as someone that might hold USYC, my auditor is going to say, prove to me that you hold X amount, and I don't want to know it from your node, and I don't want to know it from the issuer's node, because you two might be colluding together. So to be able to go to that data oracle and then again just sell that back to our auditor and just say, there's your independent third-party source. So that could be a regulator, that could be an auditor, that could be in aggregate a stream through the tie into a dashboard so that people can see all that information. There's no one-size-fits-all. You configure exactly what you need for the use case to be fully compliant.
And what do you see this enabling in terms of collateral? Because we've known for banks and especially in the digital assets, there's been a lot of, let's say, conservative approach just to like managing all the collateral. How is that going to enable more real assets to come on crypto rails?
Well, I mean, I'm hoping that institutions like Galaxy won't have to park $100, $200 million of cash over the weekend in the case that something is going to happen, and instead could carry treasuries over the weekend, repo them as they need them through something like Broadridge DLR, receive a stable coin for working capital, and go back to it. And being able to finance your desk as you need the working capital is something that would be a material savings for Galaxy and others like yourselves, and would create whole new intraday markets that have been lost since the global financial crisis. So just solving a real problem, delivering meaningful cash savings to the participants is going to draw more participants in.
That's literally like one of the things that we're working on right now, right? Like being able to hold weekend collateral for Galaxy and being able to do that. So USYC has instant creation and redemption even on the weekends. So we think that's going to be a really important use case. But also, you mentioned banks, right? Banks will not be able to hold large sums of their HQLA, everything they have on balance sheet without this sort of privacy, right? They really cannot have that real-time monitoring on that stuff. So, and that, I think that's going to be a limiting factor, which was the design principle for Canton from the beginning. And so being able to unblock that is going to really allow the biggest players in the market in finance to start using blockchain more effectively.
It is a threshold issue. I mean, I don't know how else to say it. Like, the lack of privacy is preventing the adoption of blockchains.
So as we're coming up on time, I think I have one more question that I'm the most excited about. So you can do all those things. So now how do you get started? How do you get started on Canton Network?
I think you have to pay Eric a bunch of money.
Quite the opposite. Quite the opposite. We did a fair decentralized launch, so we did not do any pre-sale, no pre-mine, no ICO, no STO. Everybody that wants to participate in the network can come and do a little bit of work. You run a node. You're running a node, and that node allows you to start to earn coins so that you can participate in the ecosystem. And then as soon as you join that ecosystem, we start driving very hard into connecting you to the high utility applications in the network, making sure that you're educated about what you can do while you're there. Much more of a depth before breadth approach in the Canton ecosystem. So we have a number of partners. One of them's here, IntellectEU. You can talk to them about running infrastructure for yourself. You can run it on your own. But really it just starts with the same way you would enter any other ecosystem. Run a node, set up your wallet, start to interact with the things that are there.
Awesome. Any final thoughts for our audience today?
Thanks for finding the random side room. Nice attendance. Thank you.
Yeah, I think a theme that I keep coming back to is really thinking about what the requirements are from a first principles perspective. We're seeing a lot of people who are like, oh, I'm going to make that with this little change, or I'm going to make this with a little change, or I'm going to take this thing that's there and deploy it over there. All of that is like not nearly as valuable as if you can start from first principles and say, what are the things that we're missing? What are the things that matter here? And build to that solution rather than try to keep porting things back and forth.
Yeah, and I would just say, I mean, there's a lot of vaporware in crypto, and so when you find projects that have actual real world use cases and are transacting trillions of dollars in a construct that is scalable, I would latch on pretty quickly.
Awesome. Well, please join me in thanking our amazing group of panelists. And enjoy the rest of the day.